Bitcoin's dollar-denominated exchange rate is down like 10% in the last week, 20% in the last month, 30% since all-time high of about 109K earlier this year. Lots of people, mostly newer people, freaking out. We just got a executive order from the President of the United States announcing a creation of a strategic Bitcoin reserve with the possibility of the US government buying more Bitcoin. And the coin market cap fear and greed index is at extreme fear. To me, that's insane because anyone who's been in Bitcoin since before the election is A, still in profit, and B, stoked to buy this dip. But let's dig a little deeper into this tweet on the screen and the psychology that goes into this. You've heard the saying, be greedy when others are fearful and fearful when others are greedy. So yeah, if you're a real convicted Bitcoiner, you're happy today. But as you can see from the tweet, that begs the question, why are Bitcoiners happy? Well, if you have conviction in an asset, this is possibly one of the greatest asymmetric buying opportunities you'll ever see in your lifetime, maybe? Because there's this strange inversion that happens when you've been in Bitcoin for a while, that instead of being happy when the price goes up and sad when the price goes down, you start to get nervous or afraid when it goes up too much, and you get happier when it goes down. Why the hell would that be? It's counterintuitive, right? Well, first of all, the strip mall guy here is really missing a fundamental tenet of investing, regardless of asset class, which is the old saying, buy when there's blood in the streets. The point is, you never want to blindly follow market sentiment. And if you've done your homework and you have true understanding of and conviction in an asset, then when some other broader market factors or market sentiment changes and the price of your favorite asset goes down, but you understand it well enough to know that the fundamentals have not changed, well, then of course you see that as an opportunity. If other market participants are willing to sell in the short term out of fear or lack of understanding of the fundamentals or lack of conviction, then that information asymmetry creates opportunity. And you'd be wise to take advantage of it. Take the early days of COVID as just one example. Oil futures went negative. That means oil producers were paying buyers to take oil off their hands. Chevron stock dropped by like 55% from March 6th to March 23rd of 2020. So would a savvy long-term investor who understands oil see that as a buying opportunity? Of course. And he'd be up over 250% today because he would have understood that there was lots of fear and uncertainty about short-term factors, but most likely nothing had changed about the global long-term demand or production capacity of oil. Well, similarly, when Bitcoin's price changes, Bitcoiners ask ourselves, has something about the fundamentals of Bitcoin, the token, or Bitcoin, the network, changed? Has the total supply of 21 million changed? Has the rate of new supply issuance changed? Has the monetary policy of the network changed? Has something about the security and decentralization of the network changed? Has the global hash rate changed? No? Okay, so then Bitcoins are still durable, portable, divisible, fungible, verifiable, and scarce. And the ledger is still immutable. And the network is still decentralized and secure and trustless and uncensorable and global and peer-to-peer. And new blocks are still being produced on average every 10 minutes. Okay, sounds good to me. So then there's some information asymmetry going on. People seem to be afraid or think something's changed. Sure, there could be broader regulatory environment changes or something that could hinder adoption in the near to medium term or the long term. That's possible. But is that happening right now? Definitely not. Everything is pointing towards greater adoption, better regulatory environment, more institutional adoption, more nation state adoption. So the short-term and medium-term factors that would affect Bitcoin seem pretty positive. And in terms of the long-term factors, Bitcoin is still the best money ever to exist, still a monetary parasite that will suck all the value out of every other money and store of value on Earth over time. And every Satoshi that you can acquire today will forever be a fixed percentage of the total overall supply. So if you can acquire those Satoshis while other people are selling them at a discount, why wouldn't you be happy about that? Sounds like a good opportunity to mine some fiat and exchange it for more Bitcoin. As somebody wise once said, you might want to get some just in case it catches on. So back to our friend, the strip mall guy. You think he would understand all that, right? If he wants to buy a strip mall and something causes the price to go down, but he believes the fundamentals remain unchanged, then he'd be happy now that it's on sale, right? The reason that I think this is harder to understand from a real estate perspective is A, you can't see the value of your real estate every day, so you don't actually know if it's fluctuating. So the level of transparency into the price volatility of Bitcoin feels scary. And B, probably much more important, if the value of your real estate goes down significantly, it probably is due to some fundamental factors changing, and that makes you scared. So here's the biggest difference. And this is going to piss some people off and be hard for some people to understand, but real estate is not inherently a store of value. It's a utility good that's become monetized due to a tremendous confluence of external circumstances and other factors that mean that it now gets treated as a store of value by people who don't want to hold debasing fiat currency. But if you just think from first principles, why should rotting wood and drywall inherently store its value or significantly appreciate over time? We all know that cars are thought of as a depreciating asset. And yes, of course, people need housing, so there's persistent demand for it. But it's the artificial constraints on supply that maintain prices much more than just persistent demand for housing. And it's the existence of the money printer, the ability of the government and the banks to print newly created money and let someone borrow that money at 5 or 10x leverage to buy housing that artificially drives up the prices of housing. So people have caught on to the fact that houses store value better than debasing fiat currency, so they want to store their wealth in housing. But housing should not be monetized in that way. It should not be used as a store of value. It should be used as a utility good. And the price of housing should fall to the marginal cost of production as it would in the free market with any other utility good. So back to our strip mall guy. If the value of real estate changes dramatically, it's probably because one of these other external factors that's propping up the artificial monetary premium on housing has changed. And that's scary if you're a strip mall guy, because the value of your asset is based on all these other external factors that can change. The regulations, the taxes, the interest rate. Real estate only has inherent value as a utility good. Its high prices reflect a monetary premium being put on it above and beyond that utility value. And that monetary premium is not based on the fundamentals of real estate itself. So if the value changes dramatically, it's probably because one or more of those external factors changed. And now your asset is losing some of its excess monetary premium. So if you live in that real estate world and you see things through that lens, when the price of your favorite asset changes, it's probably because something scary has affected the monetary premium. But if you're a savvy investor, you'd investigate, see if the fundamentals you believe in have truly changed. And if they haven't, you see that as a buying opportunity. But like I said before, even if the fiat exchange rate of Bitcoin changes, the fundamentals of why it has value have not changed. The reason it feels scary to people is because Bitcoin is 100% monetary premium. And the market is trying to figure out what should be the dollar-denominated price of each of these one of 21 million Bitcoins. And there's something like $900 trillion worth of money and stuff and assets in the entire world. About half of that, 450 to 500 trillion of it, is global private wealth that is looking solely for a place that it can store its value into the future. Bitcoin's market cap today is less than $2 trillion. So this is an asset that has the ability to absorb all the world's monetary premium. And it's currently holding less than 1% of the entire world's global stored private wealth. And the underlying fundamentals of the asset have not changed. Which direction do you think this is heading? That's why I'm smiling, and that's why Bitcoiners who understand this are happy. As always, if you like this video, please like it. Please subscribe to the channel. Leave a comment or a question if you got one. Share this with somebody who you think might enjoy it. Or the next time somebody says, why are Bitcoiners happy when the price drops? Share this with them. Thanks for watching this video. And as always, never forget, Bitcoin's inevitable.